In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. By using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing an incredibly strong level of monthly resistance, which is actually a historical structure level for this market. In fact, this zone was acting as previous resistance here, again, resistance here, and at the moment the market has once again tested this exact same zone. Now, as we're testing this area, we could expect bearish price action to be created away from this zone. However, before the market does that, usually we get a deeper test of the area, as we can see that it happened here and here. So we could expect first a bit of short-term bullish price action before then getting that potential move to the downside. If we go and see what we have on the weekly time frame, what we can see is that from a weekly perspective, we just got a very strong impulse to the upside, and currently we're getting the correction. Now, in general, after an impulse, if you want to measure correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 0.32 Fibonacci retracement currently lining up exactly at this zone, which is previous weekly resistance turn support, which we could expect the market to go and test before then potentially getting rejected to the upside, meaning that what we could expect, at least by looking here at the weekly time frame, is some short-term bearish price action before then getting some longer-term bullish continuation for a deeper test of the monthly resistance that we have identified at the beginning of the video. Going down on the daily, what do we see? Now, from a daily perspective, first of all, I did speak about gold a few times in the past. I spoke about it when we were here. I explained all the reasons for which we could expect this rejection to the upside. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. But before we continue going with our analysis here, if here continuing with our analysis from a daily perspective, the market would create the move to the downside that we would like to expect by looking at the weekly time frame. Essentially, if you remember, for the market to go and test this 0.382. Here, from a weekly perspective, at that point on the daily time frame, what that would mean is that we would have the creation of this daily M pattern. And after the creation of a daily M pattern, what we could expect is a potential move to the upside for the completion of the M pattern at the neckline. So if we will actually have the creation of this daily M pattern, we would have very good probabilities of seeing a potential move to the upside for the completion of the pattern. So how we could be approaching this move? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4-hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete the M pattern at the neckline. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.